Welcome as everybody arrives. We're starting to get a good group of folks here. I hope everyone is staying warm. Kunal, do y'all have snow?
Yeah, so we got not too much, but I'm actually originally from New Jersey, and I was talking to my parents yesterday. They got about 30 inches up there actually, and they were sending me some pictures. Unbelievable, so much snow. I mean, I haven't I haven't been in Jersey for a snow in maybe like 4 or 5 years now, so I kind of miss it. But then I leave to go to work, and I'm walking, and I don't miss it anymore.
That's 30 inches. Oh my gosh. Where
Yeah,
could
it
we get a
was
half?
that level of snow in the Northeast, at least in Jersey. I'm sure, up in Maine and Vermont, it's a little bit more normal, but in Jersey at least it hasn't been like that in a very, very long time.
Oh my gosh. All right. Well, good.
You
Well,
can have all that snow. Don't eat part of that.
Yeah.
Where I'm in upstate South Carolina, and we always get threats of snow, and they'll close school
Yeah, yeah.
without any snow at all. They'll salt the roads and make a mess, and we don't get one
They
drop.
do, they do very similar in DC. And I remember when I moved here from Jersey, it was always so crazy to me because we would have, a foot of snow, foot and a half every now and then. And nope, you guys are going to school tomorrow, you're going. And then came over here and the threat of snow will shut the city down.
well, I do have to say, you probably don't want us Southerners driving in the snow.
Right.
No, you do not.
All right. Well, Justine, it looks like most of the folks are here. So I want to welcome everyone today. I am Erin Oots. I facilitate the Upstate Entrepreneur Ecosystem for 10 at the Top. We are very thankful to them that they have us as one of their initiatives. We are also very thankful to our series sponsors, Ogletree Deacons and Trahell Corporation. They make all of these workshops and possible and for us to bring in great speakers like Kunal and Earl. So today we are starting off the new year with a new programming, and it's going to be 6 workshops of a much more deep dive information for our entrepreneur support providers and anyone else who wants to attend. As the Upstate Entrepreneur Ecosystem, our job is to work to support the ecosystem's ability and capacity to help entrepreneurs be more successful faster. So we start today with Paycheck Protection Program, Second Draw, a much deeper dive. We are very excited to have Kunal Parikh from Senator Tim Scott's office with us today. He is a legislative policy advisor. He helped write some of the PPP legislation. He works with Senator Scott on the Small Business Committee and was most recently involved in some of the updates from the December CARES Act changes. We also have Earl Gregorich with us today. He's the area manager for the Greenville Small Business Development Center. We are always happy to have Earl. He was here in just a little less than a year ago, introducing the very first PPP draw program. We didn't know it was going to be first draw at that time. He worked with us for quite a few times last spring, helping us understand the methods and how to make sure that our entrepreneurs had all the T's crossed and the I's dotted so that they could appropriately apply, as well as make sure they were in compliance so that they could then receive forgiveness, I guess, for PPP. But today we're going to have no slides other than this one. Earl and Kunal are going to talk about, just give general overview of some of the things that have changed. Then we're going to open it up for questions. We feel like the best use of your time today is to be able to hear what you want to hear from Earl and Kunal. And then, so if you would please put all of your questions in the chat. Also introduce yourselves in the chat so that we'll know who's here, because we do have a very exciting mix of folks today. We do have ESOs, or entrepreneur support providers. We have nonprofit leaders, and we also have business leaders, entrepreneurs who own their businesses. So we welcome all of you today. One other little thing, if I do not get to your question, I apologize. And if I skip you completely, send me a little private message in chat and say, Erin, this is important. And I will start to pay attention to that, and I will get right to it. So I'm going to turn my slides off and turn it over to Kunal. So thanks to all of you. And Kunal.
Hey, everyone. Thanks, Erin. Happy to be here. Happy to be talking to everyone. So as Erin mentioned, my name is Kunal. I work with Senator Tim Scott. I'm a policy advisor. I assist him in the Small Business Committee assignment. So we're actually a committee member on that portfolio. And you know, when the pandemic really kind of first started in March, got a couple relief bills out there, but then the big one was CARES Act, and Senator Scott took a very forward-facing, leading role in developing the PPP program. We got it passed. We were very involved in implementation for the next few months. Talked a lot about getting it refunded, and so, you know, as Erin mentioned, at the time, y'all didn't know that it was going to be the first draw and second draw, but we were always, you know, following the success of the program that we saw. While there were certain hiccups, we were always aiming to get to that second draw, you know, that let businesses get that second bite of the apple. So we were more than happy to vote for refunding the program in December with some, I think, welcome changes to the program. So just to give a quick overview, I'm going to be doing sort of a high level description of kind of the changes to the PPP program, what the second draw includes. But again, I think our time is best served with questions so that we can really get into the details of what you guys would like to know. And if you see me look down, I have just a couple of notes here just so that I don't forget anything important. So that's why I'll be glancing down every now and then. So just to start off, PPP was built for existing small businesses. So to be eligible, it had to be operational by February 15th, 2020. If you started your business after that, unfortunately, you're ineligible for PPP, but you're still eligible for various different SBA programs, SBA loan programs, whether it's 7A or the 504, or whatever it might be. But for PPP specifically, you had to be in business by February 15th of 2020. So this program is really built towards existing businesses. Now, the first draw was, had to have less than 500 employees or meet some of the other affiliation standards. The second draw loan reduced that size from 500 to 300, and you had to have a 25% gross receipts reduction from a similar period in 2019 to a comparable period in 2020. So for example, you take a look at your gross receipts of the third quarter in 2019 and your gross receipts in the third quarter of 2020. If you had more than a 25% decline, you're good to go. You're eligible. Go ahead and send in your application. Next thing, whereas the original PPP was max loan at $10 million, it was 2.5 times your average monthly payroll. And if it exceeded 10 million, you'd get 10 million. The second draw has been reduced to 2 million, but it's still 2.5 times average monthly payroll. So as long as you don't hit that 2 million, you'll get that 2.5 times. Excuse me. Now, if you fall under the NAICS code 72, that's NAICS, NAICS code 72. A lot of those businesses are in the hospitality, restaurants, hotels, motels, all those different types of businesses. You can get 3.5 times your average monthly payroll with a max of $2 million. Now, when it comes to getting your loan and what you can use it on, it started a little bit complex where you had to use 75% of your loan on payroll costs. And that created a lot of problems. A lot of businesses, that's just not how a lot of businesses work. If you work in a certain different type of industry where you have different types of costs, you can't use your 75% of your loan all on payroll costs. And that way you can't get a forgivable loan, and then the benefit of a PPP kind of goes out of the window. So we reduced that to 60/40, which we think helps a lot of people. We know it's not perfect, but we think that helps a lot of different businesses. And just to move on past the second draw, we also included set aside. So if you're a minority business, you could reach out to your CDFI or MDI. These folks will be able to serve you pretty well. They got set asides of funding, $10 billion for each one, to work with you in getting your PPP loan application into SBA and processed. Next thing that's very, very important is forgivable costs. So originally it was really just utilities, rent, mortgage, and then payroll costs. Under the new PPP loan second draw, you can use your loans for supplier costs, personal protective equipment, PPE. So kind of trying to address the COVID angle here. And one of the last things is property damage. That maybe in certain areas that will kind of be different for other folks. Next thing, I don't know how many lenders we have on here, but one of the big things that we did for lenders was we created a hold harmless provision. So lenders, if you make a loan under the right circumstances, make it in good faith, you have no reason to believe that the applicant is lying or telling you things that are not accurate, you will not be held liable for a fraudulent loan. So that's something that we were asked about from many lenders, many businesses. So we were able to get that in. I think that was a big win right there. Now, back to forgiveness. This was another thing that we heard from a lot of different businesses was the forgiveness application is just way too long. It's too complicated. It's too long. So what we did was, if your loan was less than 150,000 and the average loan size was, you will receive automatic simplified forgiveness. This was a big thing that Senator Scott was prioritizing, was simplifying the forgiveness application. We saw the application, it was way too long, it was too complex, required hours and hours and hours on end. So if you have a loan that's less than 150,000, keep your documents, because you might, there's a chance you might be hearing from SBA, but if you use your loan properly, if you use it for the right reasons, simplified forgiveness, you're all set. If you got a loan that's larger than 150,000, keep those documents, make sure you're holding on to them, scan them, email them to yourselves, whatever it might be. But you could be hearing from SBA just as they're doing their checks. But simplified forgiveness, big win right there, I think. Now, one of the other things was South Carolina is a big tourist city, so I don't know how many tourist companies there are on here, but we push to get 501c6 organizations, chambers of commerce, destination marketing organizations, bunch of businesses like that. We got you guys included into PPP. So in the first round of PPP, weren't eligible. Now you are. If you didn't know that, go ahead and send your application in. Now, last few things. EIDL loan. EIDL loan had a lot of problems early on. Even still, it was supposed to be $10,000 for every applicant. The demand was a little too high. SBA changed the rules a little bit. So what we did in this round, we got $20 billion more into EIDL. If you applied for EIDL, you don't have to do anything. SBA will reach out to you. And if you apply for that $10,000 advance, SBA will reach out to you and they will reimburse you essentially. Let's say you got 2,000, they'll give you another 8. Let's say you got 3, they'll give you another 7. So they'll reach out to you. You don't have to do any work on your part. Now, their outreach leaves a bit to be desired, to be honest, but they're working on it. I spoke to them the other day. They're working on it. They will get to you hopefully sometime very soon. If not, my email, I believe, will be at the end of this. Feel free to reach out and I'll try to get you guys squared away. Last thing, I just want to mention the numbers here. South Carolina in total so far has about 75,000 approved loans totaling $6.4 billion. I think this is great. I think these numbers are good, and they're only going to get bigger. To the extent that you have questions, concerns, please save them for question time. And again, if I'm not able to answer your question, shoot me an email and we'll have a conversation about it. We'll try to get it squared away. But that about does it for me in terms of the federal level. Last thing, we had a new SBA administrator hearing today. So we will likely have a new SBA administration. We have a new president. So very big small business day today.
All right, thanks, Kunal. We'll pick up there where you were talking about the EIDL and just kind of run through some of the other programs that everyone can feel free to ask questions about. I'm not going to go into the real details on it because we want to hear from you. One of the other programs, as was mentioned, the EIDL program, the disaster loan program has actually been open for a while. It was in force even up through current times before we had the second draw arrive. So if you have not taken an EIDL loan to this point, you can still apply for that program. That is a very low interest loan. It's 3.75% for small businesses, 2.75 for nonprofits. Carries a 30-year term, and there are no prepayment penalties on that. So very inexpensive money if that's what you're looking for. That is a loan, though. That is not a grant program. With regards to the EIDL advance that Kunal was talking about, as was said, SBA will be contacting those who are eligible. There are some eligibility requirements that you must meet, as well as just having applied before. You actually have to have 300 employees or less. There's a 30% reduction in revenue. You must be able to show that. And you also have to have a low income community designation before you can qualify for the balance of that EIDL grant. So just be aware to watch your emails. You should watch for something coming from sba.gov at sba.gov. They will reach out to you. There is not currently a online portal application for you to jump in on that. So just watch for that email. Another program that is out there that we found great success with, a lot of our clients are talking highly of this one, which is the SBA debt relief, in which your interest and principal payments are covered for 6 months. Many people were able to take advantage of that the first time around. That is also going to be offered for loans between February 1st and September 30. Some of you may qualify for an additional 3 months if you are an underserved borrower, and we can talk about what that means offline or in a chat if need be. Keep in mind these payments that are covered are only up to about $9,000. So just be aware of that. And that is on loans like the 7A, the 504 loans. That does not include anything with regards to PPP or EIDL, none of the stimulus related loans. These are the loans that are normally in force, your 7A, your 504 microloan type programs. Also, pandemic unemployment assistance is in force. So if your workforce or if you're a gig worker, you may have interest in knowing that that is continuing. That's in force out there. We also have the employee retention tax credit. So in the first go around, you could either get PPP or ERTC, the employment retention tax credit. With the new legislation, you can do both. This can be a significant amount of savings for small business because you can get up to about $14,000 really as a tax credit against your payroll. We're telling all of our clients to work with your payroll provider, work with your accountant on this particular program, because frankly, it is just too complex to just sit down and move forward with it on your own, or for us to answer a question on a webinar type of a situation. It gets kind of deep. So just be aware that you can do both of those, the PPP and the ERTC now, and it is a significant savings for small business. If you are a Venue. If you operate a venue and you have had to shutter that venue due to COVID, there is a grant program available for you on that as well. The Shuttered Venue Operator Grant, SVOG. As of last check, which was like 30 minutes before I got on this call, there was still no application portal open for this yet. But you can get up to a $10 million grant through this program. There are several different things that qualifications that you must meet in order to receive this funding. But if you fall into this category, this might be a better route for you to take in some cases than PPP, because you can use the funds for a wider range of expenses than what you can on PPP. So if you fall into that category, feel free to reach out, ask some questions today. I do have some specifics on that we can cover. But otherwise, I think that's just about all the programs that I have to mention. We can start taking questions now, Aaron, if you like.
Earl, thank you very much. I want to ask very quickly if you could post the website where it's easiest to get to the portals.
So for EIDL and SVOG and the like, that's going to be the SBA.gov website, and I'll post the full web address, because I think it's SBA.gov/COVID relief or something like that.
And is it easy to find if you go to the SBA.gov website?
It is. If you just go to SBA.gov, there's a big banner right there at the front.
Okay. All right. Very good. Thank you. We do have a question from Franny. Franny, you may have to clarify some of this for me, but it says, what was the loan up to 9,000, and can it be combined with the government loans? And Franny, if you'd like to speak up if I said that incorrectly.
I'm sorry, that came out all wrong on that chat. So I was asking Earl what the loan was that was up to the $9,000 for the small business loans, what that loan is called.
Actually, that was the debt relief program. So a business can get up to $9,000 of their principal and interest paid on an SBA 504 or 7A or micro loan. It's not a loan program. They're paying the payments for businesses that have that type of a loan.
Thank you.
Thank you, Franny. Kunal, did you want to say something?
Yeah, if you were also referring to maybe the EIDL advance, which is up to 10,000, that's just an advance. It's not a loan either. It's just an advance. They'll give you $10,000 essentially. You have certain qualifications, and I think they're prioritizing former applicants. But once they reach that demand of everyone that had applied and has now gotten the 10,000, they'll be moving on to new applicants. So if you weren't asking about that, then totally disregard. But just in case you were, just wanted to mention that the 10,000 advance is available and could be available further if you had not applied a little bit down the road.
All right, very good. And just to clarify too, that's $9,000 of your payment. So that's $9,000 that you don't have to pay towards your loan.
That is correct.
Okay.
And that's every month for 6 months.
Okay. All right. Very good. Thank you. All right. So the Shuttered Venue Operating Grant, there's a question here from, oh, wait, where did it go? Oh, Justine. Does that include outdoor events, activities? Is that correct, Justine?
So if your event venue is an outdoor venue, that in and of itself does not disqualify you. You can be indoor or outdoor. However, there are some qualifications in that you must have fixed seating. You must charge a ticket charge or a cover fee or something along those lines. There's there's some other qualifications that go with that, but simply being outdoor does not disqualify you.
Great. Kunal?
Agreed with.
Okay, all right, very good. All right, so Bryn Turner, thank you for the question. With our first round of the PPP loan, we kept our employees working for 8 weeks and then had to lay them off instead of laying them off and then bringing them back. For this round, when we apply, can we only count payroll on the employees we kept, or can we look ahead to people we may need to bring back in a few months?
So I'm not sure I'm exactly understanding this question, but I would say the 60% that you have to use on payroll, that can be used on the employees that you kept and also brought back again. For, let's say, you had to lay off your employees after that 8-week period of the first loan. And if you use your second draw loan to bring some of those employees back, then that will count as part of your 60%. You can't use it for folks that you, if I'm reading this correctly, that you plan to bring back. That won't count.
Okay, all right, very good, thank you. All right, Dean, thank you for the question. Upcoming says, what if you had a 50% decline in one quarter, but revenue increased in the next quarter? Are you still eligible?
Yeah, so that depends. It's going to be a comparison. So you have to, the way that it's calculated is from year over year. So you have to do what your, let's say what your second quarter in 2019 looked like versus what your second quarter in 2020 looked like. Third quarter to third quarter, fourth quarter to fourth quarter. It can't be second to fourth or third to second. It has to be comparable quarters. That's how they're gonna gauge your eligibility. So you certainly aren't being penalized for your revenue going back up. That's a fantastic thing. That's awesome. But when checking your eligibility for PPP, it has to be comparable quarters from last year to this year.
Right.
Okay.
So what if you're in third quarter, we're down 50%, 20 to 19, but then fourth quarter, you were up in 20 compared to 19?
I'm sorry, I couldn't get that exactly.
So if in third quarter, you had a 50% or more decline in your 2020 income revenue compared to 2019, but then in the fourth quarter, your 2020 revenue was higher than your revenue in that same quarter of 2019. Does that matter, or because you had the other quarter that was so much less,
Yeah.
are you eligible?
Yes. Yeah. From my understanding, yes, you'd still be eligible. Earl, let me know if you have heard anything different, but from my understanding, that would still make you eligible.
Yeah, it's strictly one quarter to the other. It doesn't matter what the other quarters are. You just have to show that at least one quarter was less in 2020 than it was in 2019.
Just one quarter.
Just one quarter.
Not more years. Okay. Now the other part of the question was, is the amount of the loan based on the quarter that makes you eligible, or is it based on current expenses and payroll?
Yes, it's current.
Okay.
The current
so it may have been second quarter of 2020, but now we're in first quarter of 2021 and our expenses may be different.
Yeah.
Okay.
I think we should clarify that the amount of the loan does not have anything to do with the loss on the quarter.
Yeah.
It has to do with the payroll.
Yes.
Your multiplier on your payroll. It's not
2.5. Yeah. 2.5 times payroll. It has nothing to do with the loss. Has nothing to do with the loss on the quarter, the gross receipts on the quarter. It's 2.5 times your average monthly payroll, or 3.5 if you fall under NAICS code 72.
Okay. Good. Thank you. All right. So I have a question from Benjamin Towell. So thank you, Benjamin, for the question. Can you please elaborate on the 7A and 504 loans which are available to businesses which opened after February 15th?
Yeah, sure.
So-
Happy to. 7A is the SBA's flagship loan product. It's that's kind of how the 7A was PPP was kind of built out from the infrastructure of 7A, which has roughly 800 approved lenders. They offer, long length, low interest rate loans. 504 are the micro loan products. Those have their own, certain eligibility requirements. I don't have them exactly off the top of my head, but those are, separate products. Apart from PPP, they're still SBA products, but they're outside of the kind of COVID world. These are products that have existed for a number of years now. And those are available to businesses, small businesses, as you see fit.
Yeah, if you had walked into a bank prior to COVID and requested a small business loan, the SBA would have stepped in to guarantee that loan under the program of either 7A or 504. So these are the loans that were there any day, and they continue on.
Yeah.
Now, and honestly, if you're looking for an expansion loan or an additional loan of any kind for your business, right now is a really good time to consider the 7A and 504 loan programs because of the 6-month payback on the principal and interest. They're waiving fees. They're guaranteeing up to 90% on the guarantees. So it's a very, very good financial decision right now if you think you're in a position to take on additional debt in your business.
Right.
Good. And Benjamin, I see you have some more complex questions. If you don't mind, if we hold off on that, because there's quite a few other questions, then maybe we can come back, or you can contact Earl directly. So thank you for that. All right, so Susan Giardina, concerning a second PPP grant, when calculating if you qualify to apply for a second loan, do you add the first PPP loan amount to your revenue for 2020 and then see if the amount is at least 25% reduction from 2019 to apply? Well, that's a good question. So does the amount that you received in PPP funding in 2020, if it came in one of those low quarters, for example, does that change you? Would that potentially throw you out of having a over 25% loss?
No,
Okay.
I don't think that would.
No, PPP loans are not considered revenue, and this is basically looking at revenue. So you do not count your PPP funding or your EIDLs or any of your other grants as revenue in these calculations.
Okay.
Can I ask you one more question? This is Susan.
Sure.
If 2019, my husband was an independent contractor. 2020, the company that he did work for required them all to become either C Corps or S Corps or LLCs. So when I'm looking at 2019, does that probably doesn't really matter because I'm looking at the quarter of revenue that's come in. I guess I'm answering my question as I say this. So that doesn't really matter that he was a different classification of employee from 19 to 20, from 2019 to 2020. I'm going to look at revenue for the quarter.
Yeah.
It's just a one-person company with a part-time employee. So just look at the quarter. Don't worry about the classification he was in either year.
Exactly. And the lender, they'll also be, what I've found at least is that the lender has always been fairly helpful in working through, these types of questions.
Okay.
Very good. All right, thank you. I have a question here from Scott Welchel. Good to see you here, Scott. He says that the SBA website reads like only one quarter needs to be down by 25% or more to be eligible. So that should be
That is correct.
very clear. Good. Thank you, Scott, for clarifying that. Franny has another question. As far as forgiveness goes, are you hearing of any obstacles keeping businesses from getting their funding forgiven? for PPP loans?
So early on, definitely. As I mentioned, the forgiveness application process was very lengthy. It was very long. They had various different forms. We had several conversations with the Secretary of the Treasury, Mnuchin at the time, to try to get that simplified. But we kept running into, it's just impossible without legislative text. So that's why we were able to get the simplified forgiveness done in December, which I think is extremely helpful. It'll really streamline the application. I believe it's a 1-page, maybe a little bit less than 1-page form, where you certify, you put in how much money, and you should be able to get your forgiveness fairly quickly. I think the only thing is that there's a significant, there's a pretty high demand right now for all the different things that are going on in SBA, PPP, EIDL, forgiveness. So they might be a little bit delayed in, in their deliverables, but I haven't been hearing about any issues pertaining to actually forgiving the loans. So essentially no, to answer your question.
Very good. And then what's the interest rate on the PPP loans?
So it's 1%, and it was a 2-year maturity for loans prior to June 5th, I believe. It might be a different June date. I'm pretty sure it's the 5th, and then following that, they raise it to about 5 years, I believe.
5 years. Mm-hmm.
So if you get it after June 5th, you've got 5 years, but if you get it before June 5th, you have 2 years?
Yes, and that's only for the part of the PPP loan that is not forgiven.
Okay.
So it'd be 2 years for whatever has to be transitioned into a loan. There's also no early repayment penalties or anything like that. They waived all of those things. So prior to June 5th, it's 1% for 2 years. After June 5th, it's 1% for 5 years.
Okay. All right. Very good. Just so everyone knows, Earl and Kunal's email addresses will be on a slide at the end of our presentation. So we will have contact information for them available to you. All right. So we have Connolly. Glad to see you here as well. He said for an SBA 504, it says the bank SBA fee waiver, CDC processing fee waiver, and 6 months of payment subsidies.
Yeah, I think Connolly was just reinforcing the fact that this is a really good time to be looking at 504 and 7A products.
Okay.
And Connolly is one of our best lenders in the local area. So if you've got a question on 504s, he's your man. Yes,
and he is with the Appalachian Development Corporation. So Connolly, maybe you can put your email address or the website address in the chat for folks. That would be great. Thank you. All right. So Deepak Patel, he says that as a sole proprietorship, what can you use your PPP loan? No, can you use your PPP loan on the first PPP, and can he use it toward payroll and supply? Is that correct?
Yeah, certainly use your PPP loan on payroll. That was probably the main reason for the Paycheck Protection Program. It has paycheck right in its title. But yeah, you can use it for all the other things as well. After that 60% threshold, so that 40% that can be used on rent, mortgage, utilities, covered supplier costs, PPE, property damage relating to last year's various events. So yeah, the main thing is payroll, but once you hit that 60% threshold, all the other things should be there. And you'll also be able to, excuse me, I was going through the borrower forms today, and it kind of lists out everything that you can use the loans for. So that should also be able to give you a good guide. If you have any other questions, we can try to get more granular, but as at a high level, the application form itself kind of lists out what you could use it for.
I would reinforce the fact that you need to maintain that 60-40 split. One thing that we've found with a lot of our clients is with an 8 to 24 week period that you can use when calculating forgiveness, many of them can actually justify 100% of what they spent in the payroll category. So if you can do that. That's going to save you a lot of paperwork and receipt building and all of that. Just just if you can cover it all with payroll, do that, simplify the forgiveness process.
You know, just if I could add one last thing on that, you'll see. I mean, we have committee hearings all the time, and you'll see a lot of folks talk about this. But PPP and EIDL were kind of meant to be used together. So if you get PPP, you can also get EIDL. If you get EIDL, you can also get PPP. Use the PPP for payroll. Use EIDL for operational expenses. That's kind of how the programs were meant to work together. Of course, if you can't get EIDL, you can't get it. And do what you need to do with PPP. But if you can use all your PPP, which is forgivable on payroll, 100% on payroll, EIDL is there for operational purposes.
Okay, good, thank you. All right, I have a clarification from Bryn Turner related to her original question. And when they got their first PPP loan, they did keep the employees working for the first 8-week period. And then things, of course, did not go back to normal. And they're working on forgiveness, and their accountant recommended that they should use the 24-week period because most people aren't able to meet the requirements with the 8-week time period. So since they laid off some of their employees after 8 weeks, can they use the 24-week time period? Since and I guess the question, Bryn, is, and please unmute yourself and clarify, but I guess the question is, since they laid folks off after 8 weeks and they didn't actually have the payroll for 24, can they still use 24 weeks of payroll?
Yeah, that's pretty much my question. We did keep some people around, but the majority of our employees we did let go after that 8-week period. So we're struggling a little bit to get that 75%. I know you say some people can get 100% off of their payroll, but and at the time we applied, we were like the first one to apply with our bank, and we didn't even know at that time we could count benefits. So even putting the benefits back in, we're having a bit of a struggle. So we're trying to figure out now where to go moving forward and how to make sure that we get all our money forgiven.
So unfortunately, I'm not allowed to, advise essentially on what to do. But what I can say, kind of what, and hopefully I'm understanding this properly. You're not able to, kind of transition that 8 into 24 after the fact. But the second draw PPP loan that you can get, if that's what you're looking at, you use that, you can get a 24-week period and hire back some of the folks that you laid off. Hopefully I'm understanding this correctly. If not, feel free to correct me, but that's at least what I can say at this point.
So then that kind of takes me back to my first question. If I can use it for a 24-week period, let's say I have 10 people left on my payroll now. I have to take those 10 people's average payroll, multiply that times 2.5, and then use that money either towards keeping those people working for an additional 8 or 24 weeks. Or, if events, like we're an event company, so if events come back, then I'll need to bring back a good chunk of my people, but I don't know how to plan.
Earl, should Bryn have a meeting with you?
Yeah, I'm thinking we need to probably have a phone call and get the specifics of the situation in the timeline, because
That'd be fantastic.
Yeah, you've got a couple of different scenarios with your first draw and now your second draw, and I know that there were also some employee headcount qualifications on the first draw that you have to meet. So we should probably talk offline on that and see if we can get that straightened out for you.
Okay, that'd be wonderful. Thank you.
All right, very good. Franny had another question. Is the EIDL loan at 1% rate as well, or 2.5%?
No,
It's definitely not 1%. I believe it's 3.25. If I can remember correctly, I believe it's 3.25.
Yeah, the EIDL loan is currently at 3.75 for businesses, 2.75 for nonprofit. but it's also for a much longer term. You can get in some
30
cases
years.
up to 30 years on that.
Okay. All right. Very good. And Connolly, thank you for putting your contact information in. Is there anything else that was not covered that you wanted to ask about, or that someone else is asking you about? Anyone? Oh, okay.
I have one more question. I'm sorry.
Yeah, go
I
ahead,
hate
Franny.
asking all of these questions, but I thought I heard you say earlier, either Earl or Kunal, about these loans covering past events. So if you say you put down a deposit for an event that you were supposed to have and it got canceled due to COVID, would you be able to use that money to pay for that non-refundable deposit from last year?
Unfortunately, PPP loans can't be used for that. That's more of, you know, a separate operational type of thing. The PPP can be used for payroll, as I said, rent, mortgages, utilities, you know, supplier costs. That's about if it, you know, if you have other questions on what you can use it for, again, those are listed out on the borrower application form. So that'll give you a really good sense of what you can use it on.
Thank you.
Mm-hmm.
Very good. There's very good questions from Deepak and Sunita Kumar, kind of related to sole proprietors. Sunita says that does being an independent contractor in 2020 and 2021 qualify you, or do you have to be an LLC or have a payroll system in place as of February 15th, 2020 to get PPP? Or do you have to?
You can be a 1099 independent contractor. They have a whole checkbox in there that you just, I'm an independent contractor. I'm 1099, and you're free to apply for PPP.
So would you apply for PPP backwards or forwards? I mean, for past lost payroll or forward lost payroll?
Well, so it's not for past. It's to pay for the future payroll. So
okay,
it's either to pay for, you know, 2 months down the road for who you employ right now, or let's say you got, you know, you had to furlough a couple of employees. It's to hire them back.
Okay.
Yeah, the forgiveness period on the PPP begins at the time the loan is paid out. So you can only use it for those funds moving forward, because that's what you're going to use to ask for forgiveness.
Mm-hmm.
Good. So Deepak, I think that probably answers your question. So Dean Hebel had another question. Is there a projection as to when the new round of PPP funds will run out?
Hopefully not before the end of this call.
That's a really good question. I mean, you know, the first round ran out so fast. The demand was unbelievable. It was like lightning round. And then it slowed down as people got what they needed. And then it stopped at about 500 or 521 billion had been used. There was about $130 billion left, and PPP expired, and that money was just kind of sitting there. So it seems to me right now things are moving at a good projection, at a good pace, where it doesn't feel like it's that lightning round again of people, you know, first in, first serve. Whoever gets in gets it. If you don't, sucks. That's not what it seems like to me. It seems like people are getting their chance to go to the bank, lenders, whatever. Again, so there is no projection of when it's going to run out. But what I will say, for all the faults of Congress, and there are many, when it came to early on reappropriating funding for PPP to make sure there was money to keep it going, that was there. You know, there was that 300 billion went quickly. About 10 days later, there was another 300 billion in there. So I'd say, you know, as for all the faults of Congress, which are definitely there, I think reappropriating money when it's needed is always, you know, kind of on our mind. Right now, it seems like things are working okay. But, you know, should the money start disappearing, and us hearing from a lot of different folks saying that, hey, we need more, then that'll certainly be a conversation to have.
Yeah, we're kind of hearing the same thing with the bankers that we're working with. Nobody's running around with their hair on fire at this point. So, it's a situation where you don't want to delay. If you think you're going to do this, get your application in as soon as you can. But right now, we're not hearing, the door to start to close on it. So be diligent.
Yeah.
Great. Very good. Thank you. We have about 9 minutes left. So I want to do some thank you. Oh, I see. Wait, Susan jumped in with the last good question. For our first PPP, her husband was an independent contractor. So they based the loan application off his pay for 2019 1099. In 2020, he lost about 50% of income. What income figure do we use for the second request? Is that another meeting with you, Earl?
Well, we can take a closer look at it. You actually can use your 2019 or 2020 payroll figures to make the application. So we might need to sit down and take a look at what makes sense. Because it's not just your 1099. It's actually, if you're a 1099 or gig worker, as it's referred to, we have to look at your tax return to see what's been reported as far as profits on that tax return. And that's most likely going to be different than the 1099. So we'd have to see that.
Now he's an S Corp. This year he was an S Corp all year. So I have a tax return now. But I'm just saying the income is about 50% less than what we made the year prior.
Right.
So I wasn't sure what to base it on.
Yeah, so it's still going to be, if you're an S Corp, you're on payroll now, right? You're getting a paycheck. So you'll have 941s for that calculation, but the 2019 calculation, we'd have to look back to your tax returns, find out what that bottom line number was, and then we could, between those two documents, we would be able to determine which makes the most sense for you to apply with.
Okay, so reach out to you later.
Sure.
Okay.
All right, well, thanks to all of you for joining us today. I just have a few little announcements and another big thank you to our sponsors, to 10 at the top, but also I failed to mention earlier, Danielle, Danielle, where's your last name? Sorry. Danielle Gibbs, I apologize for getting this set up and for contacting Kunal for us. Kunal, we are very happy to meet you. Earl, thank you again for being there for us. And
Glad to do it.
yes, and the next program is going to be on March 9th at 3 p.m. and it's going to be intellectual property advising for non-IP legal professionals. And it has been recommended that you attend one of the Earl's programs, the SBDC. They have a series on intellectual property right now. And I will put my slide up so that you can see that. So you can see my slide share right here. This website, and I can put, Justine, do you mind putting that in the chat? Please, thank you. So that has all of their programming in it, and they have, well, Earl, would you like to give a quick highlight of some of your programming?
Yeah, actually, if you just want to go to our scsbdc.com website, that one's probably quicker. I'll put that in the chat real quick. But at any rate, the events that we have, it's a six session series on IP, and we're about midway through it right now. So if IP is something you're interested in, you could get that. Doug Lineberry and Jeremy Stipkala, two IP attorneys, one from Charleston, one from the Greenville area, are really heading the charge on that. They do an excellent job. It's not your typical lawyer speak. They're very entertaining and get their point across. So highly recommend it. I'm sure it's going to be the same way when they do your program, Aaron. They do a really good job.
Well, thank you. And this upcoming one on February 9th is workarounds. You know, if you don't want to have to pay for IP for protection, how do you work around it and still have somewhat of protection? Earl is also doing another PPP workshop specifically for business owners on the 25th at 1 p.m. Is that correct, Earl?
Am I?
Somebody else handles that?
I'm not sure. I only say that because I'm not absolutely sure that's me. It might be another one of my team members.
Yes. So, all right, excellent. Well, I want to thank all of you for coming, and please look for events at the upstatevibe365.com website. We have quite a few business events and entrepreneur related events around the upstate listed on that. Of course, Earl's website, Kunal and Earl's email addresses are here for you. And I don't have my chat up, but thank you very much for everything.
Of course, no. Thank you. Happy to do this. And yeah, my email's there. Feel free to reach out with any questions. I'd be more than happy to help.
Good. And we do have a few minutes left if y'all want to just hang on and ask unmute yourself and ask. No? Y'all have satisfied the crowd.
Scared them silent.
All right. Well, then I have one last question about tax changes to, I know this is about PPP, but you know, you said the payroll tax and what other tax forgiveness or deferral things were out there?
So the great thing is these loans now are not taxable. These grants and the like are not taxable. Now the state level ones are, the Greenville Cares and the SC Cares, those were taxable income. But the grants that you received and the forgivable amount of the PPP is no longer taxable income. So that was really good.
So if you receive a grant, where does it go on the balance sheet or the income statement, or does it?
So normally if you receive funds from a grant or something like that, you're most likely just going to put that under other income or whatever that you're bringing in. Now, if it's a loan, obviously that's a different process, but yeah, you would put it in under additional funds or other income or something like that.
And that would be after the tax line, and then it would just show up in cash in your short-term or your liquid assets on the balance sheet.
Right.
Okay. Sorry.
You know, in many cases, we actually advise that you have a separate checking account for some of these that you have to show documentation for as to how you spent it. So if you get a PPP loan and you want to make sure you have your documentation in order, you just have that deposited into a separate checking account so you have a clean report on where that money went.
Very good. Kunal, you want to give us a tidbit of something new and that might be happening? Oh wait, you're
muted.
Sorry about that. I feel like once a day I have to make that mistake of talking while I'm muted. I feel like that's, you know, everyone has to do that.
Yeah. Until 4 o'clock.
Yeah, you know, everything is always changing in DC. There's always something new going on. You know, with you know, we have what we call a power sharing agreement done. So things are really going to be moving forward because now we're figuring out committee assignments, you know, who's going to sit where, who's going to do what. So there's going to be a lot of work to do in the coming future. The Biden team is working on another COVID relief bill. So we'll see how that plays out. I have no projections or anything like that. I've been long out of the predictions game because I'm often wrong. So we'll see how that plays out. And you know, I know that there's going to be a lot of questions coming from that because it's, you know, it's a lot of money. It's a new deal. It's a new package. So I think events like this are extremely helpful because they kind of get the folks that are affected by those kinds of packages that we work on here in DC. They're the ones that are really affected. So I'm glad to do this and to help answer any questions because it's not only nice to hear from everyone, but I get to see kind of the impacts of my work. So that's, you know, that's where we're at right now.
Good and important work, Kunal. Thank you.
Of course.
All right, 4 o'clock. Thanks, everybody. Enjoy your afternoon.
Thank you.
Thank you.